What is good, Jitlets? Welcome to my new and improved break of structure video. As you guys know, I would never take a trade without seeing a break of structure on any of my execution timeframes. And for those of you guys who don't know me, my name is TJR. I've made over 7 figures in profit day trading just at the ripe age of 22 years old. And today I'm going to show you guys how to identify break of structure within the market. And on top of that, how you guys can use break of structure to take higher probability trades within the market. And on top of that, I know that this is a video that would have helped me a lot as an unprofitable trader when I was learning how to trade. So without further ado, let's get right into it. All right, boom, chart work time. Okay, so first and foremost, before we actually get into the charts, I want to explain to you guys what is break of structure. Okay, so break of structure identifies a trend shift in current market structure, and on top of that, it can indicate orders being filled. So before we go into the charts and showing this, I'm going to do a little Picasso drawing for you guys because I figure that helps you guys best to see it just with lines instead of candlesticks first. And then from there, we'll go into the candlesticks, show you guys how to identify break of structure and how we can also combine break of structure with some of the other confluences that I've taught you guys about to actually complete and make a trade. So first of all, with this description of break of structure, being able to identify a trend shift in current market structure, we need to understand the 3 ways that the market moves, okay? There's 3 different ways that the market moves: in an uptrend, in a downtrend, and in consolidation, okay? So we're going to draw both of those out. This is super basic. You guys know market moves up in an uptrend with higher highs and higher lows, right? This is like kindergarten of day trading. And then in consolidation, it's just moving sideways. And then in a downtrend, it's moving in lower lows and lower highs, okay? So with that in mind, what is a break of structure within all 3 of these? More specifically, what is a break of structure within these 2, the uptrend and the downtrend? A break of structure within an uptrend, let's move past these Picasso drawings. Let's draw another uptrend, is quite simply when a low gets closed below within an uptrend. Plain and simple, on any time frame. Like, you're probably thinking, no, there has to be more. No, we keep it Down syndrome. Sorry, that was bad. We keep it autistic. We keep it basic. We keep it fundamental kindergarten level around here so that anybody can understand this. I'm 22 years old. I don't give a shit about any of the fucking calculations and approximations. Okay, I'm going to keep this really fucking simple for you guys. When we are within an uptrend, higher highs and higher lows, what are we waiting for to see a break of structure? We look for the most recent low to get closed underneath, and I'm going to show you guys that within the candlesticks. Boom! We're said and done with this. Now, okay, we're speed running this, baby. Now, downtrends. We're gonna make you guys profitable literally in the fastest way possible. Downtrends, lower lows, lower highs. How do we know structure has been broken to the upside? Bull run, bitches, okay? Sorry, I'm wired. Okay, bull run, bitches. We close above a high. Okay, so pause before we speed run even more. Why is this a break of structure? Well, let's just think about it. Downtrends consist of lower highs and lower lows. Okay, so that's the current structure. So in order for this structure to break, what has to happen? Mink. It literally it's in the fucking name. The name is the definition. The current structure is lower high, lower low, lower high, lower low. And then what happens? Oh, structure got broken. Why? Because now there's a higher high, which will eventually turn into a higher low. And then there you go. And then look, uptrend. Okay, we'll do this too. Maybe we sped run a little bit too fast, but look. Okay, now uptrend. Higher high, higher low, higher high, higher low, higher high, higher low, higher high. How do we know when it has broken structure? Bang. Lower low, lower high, reversal work. Okay, that's how we can identify a break of structure within both of the trending market structures. Now, for consolidation, we won't get too deep into that. However, I can't explain it. Consolidation, there's going to be lots of breaks of structure all within here. And that's the one thing that kind of sucks about consolidation. It's just because price is moving sideways and there's no actual trend. The easiest way for us to see and identify a break of structure, it's not even a break of structure, it's going to be a breakout of, boom, this range. Okay, so if we see closure above, boom, these highs, and then boom, we start an uptrend. Obviously, that's going to be breaking out of the current market structure, which is consolidation. Same thing can happen to the downside if we see a breakout of these lows and then we start forming a downtrend. Obviously, that's going to be breaking out of the structure, which is consolidation. Cool, cool. We're already learning. We're already doing good. Now, let's jump into the charts. This is going to be quick, easy, simple video, okay, to help you guys identify break of structure. I'm also going to teach you guys what is not a break of structure, because for whatever reason, a lot of people struggle with this, okay? Let's get, hold on. Let's get into it. We'll just start off on the 15-minute time frame. Gorgeous. Okay, matter of fact, let's go into the 5-minute time frame, because I remember there was a gorgeous uptrend right here. So let's just start this off. Let's say that we don't see anything past this point in time, okay? So what do we see right here? Also, let me shrink my face. What do we see right here? We have my mouse. I need a mouse pad. Okay, I need a maxi pad. Period time. Sorry, lock in. Okay, we have a high right here. This was the previous low. High, lower low, lower high, lower low. Okay, so right now, the current market structure, what is it? It's a downtrend. Okay, so for us to be able to identify a break of structure, we need, this is very important, a closure, a candle closure, not a wick. Okay, and I'll show you guys examples of what is not a break of structure after we show you guys what is a break of structure. Okay, but we need a candle closure. So when we are waiting for a break of structure within any of our strategies, if that's part of our step-by-step, okay, let's say we want a break of structure to the upside. We are going to be monitoring the highs, okay? So again, what's a high within the market? It's a 2 candlestick pattern, a move up, then a move down. So there needs to be, in my case, a blue candlestick and then a black candlestick. In this case, we have a blue candlestick, kind of an unidentifiable doji, but then we see a black candlestick right here, so we can go ahead and just call this the high. And regardless, this candle closes above all 3 of those candles, so it's pretty safe to say that it was a break of structure. But anyways, we identify, hey, we're in a downtrend right now. We have high, low, lower high, lower low, but we're waiting for a break of structure to the upside. When do we get the break of structure to the upside? When this candlestick fully closes above this high. Now what are we in? We're in an uptrend. Higher high than this high, higher low than this low, and then what happens? Higher high, higher low, 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 higher high, and then we get a mini break of structure to the downside to give us probably like a 15-minute retrace. Price continues higher. So boom, perfect example of a break of structure to the upside. Now let's show break of structure to the downside. Okay, we'll use this example. Within here, price action, let's just take this little move up for our example right here. We're in an uptrend, okay? High, low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. Bang! What happens? We're monitoring the lows. What happens on this candlestick? We get a closure. The candle closes underneath this low. In turn, high. This was the previous low. Lower low, lower high. Kind of a bit of consolidation right here, but then boom, lower low, lower high, lower low. And then we get a mini flip towards market close. Okay, so again, something that I really want you guys to understand is when we're looking at break of structure, it's not as simple as, hey, price broke structure, I'm just going to press buy. Or, hey, price broke structure to the downside, so I'm going to press sell. No. We need to take everything into account. And I'm going to be making a video probably in like the next month or so, combining all of these confluence videos that I'm remaking. Like I just made that liquidity video. I'm now making a break of structure video. I'm going to be making a new fair value gap video, combining all of these things together to show you guys how to actually execute a trade. This is just teaching you guys the confluence of break of structure. Okay, so again, don't be blindly taking trades when you just see, oh, price broke structure to the downside, because like we saw right here, price did break structure to the downside right here. This was the most recent low, and then we break structure, but then what happens? Price rips up. Okay, so again, these confluences essentially mean nothing without context. Okay, and again, if you were to take this trade, I would have called you an idiot because you're taking it at 12 p.m. on a freaking Friday when market's about to close. Okay, so again, we need context with all of these confluences before just jumping into a trade. However, when we fully understand these confluences that I'm teaching you guys, we can actually apply them to our full strategy. And when we have context and apply these confluences, we can actually take really good trades. Okay, now we understand what a break of structure to the upside is. It's a full candle closure above a high. So again, going back here, when we are in a downtrend, okay, how do we know that we are in a downtrend right here? First of all, okay, we were in an uptrend beforehand, right? We have a high, we have a low, higher low, higher high. This is a good example of what is not a break of structure, but we'll get to that a little bit later. Okay, boom, we move up, but then what happens? This is the most recent low. How do we know that we break structure? Because this candle closed underneath it, okay? From there, lower high, lower low, and then, so we're in a downtrend right now, we get a candle closure above, right here, okay? Something else that a lot of people get confused is we will literally be in an uptrend, like this. Perfect example right here, okay? We break structure to the upside. What are we in right now? We are in an uptrend on the 5-minute time frame, correct? We've just broke structure right here. They will mark out a high when we are already in an uptrend. And they will be like, bruh, we just broke structure to the upside. No, idiot! We're already in a fucking uptrend. You can't break structure to the upside when we're already in an uptrend. Get it through your head. We broke structure to the upside right here. Why? Because we were in a downtrend. This is not a break of structure. This is trend continuation. Oh, TJR, I saw a break of structure in the 5-minute right here. Idiot! It's already in an uptrend. It can't break the same structure 2 times in a row. Okay. So now that we know we're in an uptrend, let's see where we break structure to the downside, because we can't break structure to the upside twice because we're already in an uptrend. Okay, so what do we want to do to be able to identify breaks of structure to the downside? Well, we're going to be monitoring lows. Why? Because in order for us to break structure from an uptrend, to break uptrend market structure, we need to close underneath a low. So where would the break of structure be? It would be after this low gets closed underneath, right? And again, like I said before, this comes with context. Obviously, we can't just press sell here, but this would be a break of structure to the downside, and it is a break of structure to the downside. Okay, just had to clear that up. Now, let's show an example of what is not a break of structure. Again, like I was saying, we have to have a full candle closure above a high or below a low. So, again, let's look at this price action right here. We're in an uptrend. How do I know that? Because we have, let's just do this, high right here, low right here, high right here, low right here. We're moving in higher highs and higher lows. We have a high right here, and then, again, let's say we're monitoring for a break of structure to the downside. We see price, okay? We push past this low. Is this a break of structure? Somebody answer for me. No! It's not. You want to know why? Because this is a pube. This is a candlestick wick. This is not a full black candle closing underneath here. This is just a wick. So when we see a candlestick wick down here, this, in fact, is maintaining bullish structure. I know it goes against the concept of like oh, like higher highs and higher lows, because technically this low is now lower than this one, but we are still maintaining bullish structure because we did not close underneath this low. So now with that in mind, we continue bullish structure, and when we're looking for a break of structure to the downside, what do? Do we keep our line on this low? No, because now this is the most recent low. For structure to break, we're not monitoring a low that happened like 7 lows ago. We are looking at the most recent highs and the most recent lows that are made within the trend. Okay, so for this example, we're not assuming that this break structure on this candlestick wick, no. Then what happens? This forms a low, a move down, then a move up. When do we see price actually break structure to the downside? On this candlestick right here. Why? Because we actually see a candlestick closure underneath here. Okay, let's show an example of this to the upside. Perfect. We have one right here. Okay. We're in a downtrend right here, right? We have highs up here, lower low, lower high, lower low, lower high. Let's say that we're waiting for a break of structure to the upside. Okay, we're monitoring highs. Okay, we have this high right here. Oh, no, it doesn't get broken. Okay, we form a new high right here. Oh, what happens? Hey, what's that? What's that? What's that? What's that? What's that? Wick? Do I enter off of this wick, TJR? Ah! No! Do I enter off of this wick, Master Sensei? No. Do I enter off of this wick? Is it different because it's a black candle wick? No, we don't see color. We see candlestick wicks, okay? We don't give a shit if they're black, blue, white, Asian. We don't care, okay? I said that because these are Japanese candlesticks, no racial, okay? This is the high, but what we can consider is we have a move up, then a move down. So what does this now make it? What does that now make this? This is a new high. This is still a downtrend. Keep that in mind. We are not in an uptrend yet until, boom, this candle closes above this candlestick's high. And then, as we can see, price ends up moving up. Cool? Cool. So, I'm pretty sure you guys get the point. When we are in an uptrend, higher highs and higher lows. Let's find one more example. Okay. This is a really good example. This is like a consolidation type of thing. A lot of people get really caught up in this shit, and I'll break down a couple more things that are really helpful in break of structure. Okay, so let's say that we're trying to see a break of structure to the downside. Why? Because we just identified that we broke structure to the upside. Okay, so what are we going to be doing? We're going to be monitoring lows. Okay, so right here, move down, then a move up. Now this is the low. Okay, move down, move down, move down, then a move up. Now this is the low. Okay, move down, then a move up. Now this is the low. Okay, example, boom, wick, pubic hair underneath. We don't care about it. Why? We need a candle closure. Okay, again, this is a perfect example. This candle, I can't really tell if it closed underneath this, but would we care if this candle closed underneath this low? Pop quiz, pop quiz. Would we care if this candle, let's just make this candle close underneath this low. Boom. Let's say this candle closed underneath that low. Would we care? Use your critical thinking skills here. No, we would not care. Why? Because there was a new low that was formed, boom, right here. So do we take this low into consideration? No, we do not. We take the most recent low into consideration. Okay, we form a new low right here, and then price continues up and higher. Notice how even though this is a jumble of candlesticks, we still maintain bullish structure all throughout this consolidation, this jumble. A couple more examples here. Okay, this is a good one. Right here. Okay, we break structure to the upside right here prior to being in a downtrend. How do we know that we were in a downtrend? Because we closed underneath this low. Okay, boom, downtrend. What are we monitoring? We're now monitoring highs. This is the example that I wanted to show you guys here. So Again, let's think back. What makes a high? A move up, then a move down. Okay, so 2 candlestick pattern. Move up, then a move down. So blue candle, then a black candle. And if there's a unidentifiable doji, you kind of just use that as the middleman between the blue candle and the black candle. So in this case, this is the high. Is this the high? Pop quiz. Question for you guys. No, it's not. Why is this candlestick not the high? Because it goes black candle, blue candle. What's a high? A move up, then a move down. This is not a high. Why? Because it's literally just 2 moves down. We don't give a shit if its little candlestick wick popped its head above here. Why? Because it's still not a high. Maybe on the lower time frames, maybe on the 1 minute time frame, it could be a high. But right now, we're looking at the 5 minute time frame. Okay? So again, boom. This is our high. Move up, move down. We don't give a shit about this wick. How do we know that we break structure to the upside? Boom. Right here on this candlestick closure. Right there. Now, we're in an uptrend. Okay. This is the low that we're monitoring. Okay. We get moves up. We don't really create any new lows after that. And then what do we see? Boom, price wicks all the way down past this. Did this break structure? No, it did not. Why? Because this is plain and simple a candlestick wick. This did not break structure. It maintained bullish structure. So, boom. Now this is the low that we're monitoring. Do we see a break of structure after that? No. Now, this is the low that we're monitoring. Hey, TJR, why isn't it this candle? Because this is a move down, then a move down. How do we make a low? A move down, then a move up. This is the low that we're monitoring. Oh, so we broke structure right here. No, idiot. Use your eyeballs. We made a new low over here. Move down, then a move up. Bang. Now this is the low that we're considering. When do we break structure on this right here? And we can see that throughout all of this jumble, some people might not be able to identify market structure or any of that, but we were able to sift through this just with our like literally with the simplest shit ever, talking about pubic hairs and candlestick closures. That's all that we need to understand. The most recent lows, the most recent highs, and if we close above them and if we close below them. That's all break of structure is. So when do we break structure? Do we break structure on this candlestick? No, because this candlestick didn't close underneath this. It was equal with this low. When do we break structure? On this candlestick right here, and then boom, we can see price ends up moving down. Okay. All right, y'all. If you guys found this video helpful, make sure that you guys save this video and come back to it before jumping in a trade that could potentially blow your account, lose your funded, or lose you a bunch of money. And if you guys want to learn more on how to become a profitable trader, I have a completely free course linked in the little description down below. So you guys can check that out. It goes over pretty much every single confluence, including break of structure, talking about how I can actually put these confluences together to form a super solid strategy. And I have a bunch of other more videos posted on this channel talking about different confluences, talking about break of structure, and how you guys can actually take profitable trades using different strategies, where I give a ton of free game out. So be sure to check out those as well. As always, I appreciate you guys for watching. I appreciate y'all. I love y'all. Peace the fuck out, mate.